Hello, welcome to Macro Atlas, and today we're going to be discussing the big drop no one talks about for Bitcoin. We're going to approach this in a statistical and analytical lens on Bitcoin's price action. We're going to also look at the bear market cycle and how it usually plays out in terms of its structure and price action. We know this works because 5 months ago, we did actually do the same title in the same video, right? And we got to where we had determined based on statistical analysis of Bitcoin's previous bear markets, right? And how the structure plays out. So if you can see here, there was the arrow drawn out, and it was around to right $58,000 per Bitcoin. And if you see here, we got to actually around approximately 59,000 per Bitcoin, that near that level, right? So inside the yellow box where we had outlined, and we discussed why we would reach the upper range of the yellow box, as there are diminishing returns for Bitcoin's price action, right? And therefore we should experience diminishing drawdowns as well. And based on how the structure of the bear market looks, these red zones collide with that red line here and there, and we explained why all of that, there was reasoning behind it, right? So today we're going to do something very similar, but for the second leg down. So if you want to see more detailed analysis on this, then I do highly suggest you check the big drop no one talks about that I posted 5 months ago, and we explain why that happened. But one thing, there was one caveat in our analysis, is that the timing was off, right? So we expected it could this zone would take around 32 days, but it actually took around double the time, right? The direction is usually much easier to determine than the timing. So in this video, the timing is also going to be approximate. Who knows when it could happen? Nobody really can predict the future, but we can get a good idea of the probability of the directional break, to the upside or the downside, and as well how much, when we break down, how low can we go, right? That is usually more resilient to predictions than just exact timelines, right? But we will, of course, have a range of timeline. Before we start, my name is Mo. I'm a crypto and macro markets speculator. I've been a market speculator professionally for the past 5 years, but I've actually studied the markets even longer than that. So for 7 years, I've been very, very interested in markets since even I was a child, right? I would read markets about investing and trading, and I would learn about how economies are and the role of money and how the history of money as well in economies. That's why I actually chose Bitcoin, because I understood money a lot, and I understood that fiat really has no intrinsic value, and just because people believe in it doesn't mean there is value in it, especially when they continuously print dollars, right, or whatever currency it is. Nevertheless, that's not the topic for now. But let's get into it, right? So previously we had actually determined that we would get that drop right here, which happened, and we said it would be quick, which thankfully it was very quicker than even I expected, right? And we said we would play around that consolidation phase, right? And we called it, after the first leg down, you get a consolidation phase. The greatest consolidation phase of the bear market is usually in that period, and it is the hardest period to trade for all traders, right? I'll refer to the current phase that we are in compared to previous bear market cycles, so you can get an idea of where we actually are. Now, the VWAP, that's a volume weighted the average. It's good for timing the market, and we will use it for actually determining when the breakout to the downside could be, if it is. And everything said in this video is just for educational purposes only, so it's not a financial advice, and it's just a starting point, or hopefully mid-through point in your analysis. I hope it can help you, like it has helped me analyze the market, but I don't think financial investment decisions should be done solely from just watching a few videos, right? There should be some deep analysis and thinking gone through any investment or trading idea, right? Without further ado, I think we are right here. And we have said it 5 months ago, and I had not changed my mind. I changed my mind a little bit throughout the time, but it seems that that theory was pretty on point, right? So what we usually get, I'm gonna explain it in that market cycle so we can understand where we are in the current market cycle, right? What you usually get in bear markets is you get a top, okay? And then you get the first leg down move, the first drawdown. After the first drawdown, you get the great consolidation period, which is the longest and the most severe consolidation period of the whole bear market for Bitcoin. And then after you exit and break out of that consolidation period, usually and historically always to the downside, you get the second leg down move. And then we get that consolidation period in the bear market bottoming, and it's not so hard because we can accumulate Bitcoin at very good prices. So I like that consolidation period. It's not so hard. After that, of course, we start trending upward and we get the bull market that everybody loves and cherishes, right? So what you can get from this analysis is actually understand, are we going lower? And if we are going lower, how much lower are we going? And when is the best place to accumulate Bitcoin or short Bitcoin, right? So this is the analysis outcomes that we can take from this study that we're going to do. So yeah, first leg down, consolidation period. Second leg down, consolidation period, bull market. That's all it is, right? Let's see if previous bear markets had a similar structure. Well, it turns out all bear markets do that same structure. First leg down, great consolidation period in one form or another. Second leg down, the second consolidation period, and then the bull market phase. You accelerate to the upside. And we see that again in the first bear market. First leg down, right here. First leg down, great consolidation period, which is usually very long. Second leg down after breaking of that consolidation period support, you get the accumulation period, and then, or the second consolidation period, and then finally the bull market that we are all waiting for. Okay, so that's it in a nutshell. You can see those blue boxes, but also you can see those cyan boxes right here, right? Well, I want you to focus on the cyan and blue boxes in here too, and then in here, right? And now you start to understand where we could be. Cyan box, right? The small short-term relief rally that we get just before the consolidation period, and in a very nice way from that relief rally, you actually understand the structure and the range of the great consolidation period that comes after. So the major support of that short-term relief rally that you get halfway through the first leg down, right? So that's that's the leg down, that's the halfway here, and you see that major support is what flips later as a resistance line. Okay. Let's fix that to a normal line, and of course increase the visibility, and that looks just about fine. Yeah, that place forms the previous resistance becomes the previous support becomes the new resistance for the consolidation period, right? And we see that also in the previous bear market. See, short-term relief rally, support line becomes resistance later. And that's how we understood the range of the consolidation period. And that's how we were able to determine, and we finally see that we reached the previous support and we flipped it into resistance. And that's why we got rejected, right? So that's interesting. The market structure is playing out similarly to all previous bear markets. And also statistically wise, right, if you take this is a great consolidation period of statistics, right? So if you go and measure all statistics from this consolidation period, and I'll show one example, right? Show an example so you understand how it is calculated. So we take 1%, which is from the bottom to the top, and we determine that as the range that we have to check. And the range here is, for example, 46%. Okay, so 46% was the upside move. And that's why here we have 46% right here. See? Okay. And then how we determine the bottom, surprisingly, is the bottom of the first leg down move. You see that area right here is what determines the bottom and the breakout level to the downside, if there is a downside breakout for the second leg down move, right? Similar here, you can see we have still not retested it, but once we retest it and break down from it, then that's a good signal that we are going lower. Okay, that leg is very, very, very important. So the higher range is determined from the previous support, and the lower range is determined from the bottom of the first leg down in every bear market cycle. And that's how we form that range. And to support and to make sure that there are several factors that point to that direction, we also took the statistics from the downside to the upside and the day ranges, and we put it where? Within that box. So that box represents, as it says here, just the 46% upside. That's from the previous bear market cycle. But the first and the second bear market cycle, the upside was too high. So it just doesn't seem realistic. If anything, I see diminishing returns, right? It was 160% bottom to top in the first bear market cycle. Then we had 99% bottom to top. But in the previous one, we had 46%. So you can see a descending order happening, right? Bear market to bear market. And that does make sense. So if you use logic, they are diminishing returns, you know, cycle on cycle, because, well, the asset is maturing and you need more money to move the asset price up and down, and people are not as scared anymore of Bitcoin because they know it has been around for a long time and it is battle tested, right? So if you get diminishing returns, logically we should get diminishing drawdowns as well, and therefore I don't believe we're going to reach the higher range of that 46%, right? I believe this is a nice level to be topping out. Maybe we could go a little bit higher, right? Now we're getting 36%, pretty reasonable to me, 36, 37. Maybe we can go lower to 40 or that range, right? The next major support that had happened for that period, the short-term relief rally, the middle short-term relief rally, right? But I think that's a nice area to just have a top. Of course, there is no reason why we couldn't go higher or maybe even break up instead of break down and break the whole bear market cycle. But right now, macro wise, price structure wise, and sentiment wise, does seem like the downside is a more probabilistic outcome that could occur in this bear market cycle. So yeah, that's in terms of the bottom to the top range, how we calculate it. And of course, this is the average, right? 232 days. That's the average length from the point of entering that zone to the point of exiting it, right? So we had 131, and that's the 2021 bear market, 281 for, of course, the 2018 bear market, right? That phase here, that's how it's calculated, how many days it takes. For example, we can do as such. Approximately it will be 297. That should be around the same. 281. So there's just minor days on or off depending on where I had calculated previously. But you get the idea, right? So if you take the average of that zone, then we get around 232 days, and that's the maximum range of that cycle. Approximately. Or that pushes out a little bit more. But I don't believe we're going to go that far, all right? And maybe that's why I had shortened it to some level based on something. All right. Nevertheless, that's the period where because, well, the bottom should be in October based on the 364 days thing. So I introduced some bias to the zone. But of course, do feel free to draw your own zone and based on the analysis that you could do on your own, and maybe just fix some of the biases that I introduced myself and add some of the biases that you think would happen. In any, if you're really a data scientist or a scientist, you understand that even in statistics, for example, there are some statistical methods where there's a bias you can introduce by yourself based on your own logic, and that's how I usually do it. I introduce some biases based on what I think about the market, right? The macro conditioning and stuff like that. So yeah, we're still in that consolidation phase, and we have touched the top range of it, and I think the bottoming could happen, or the breakdown could happen when the VWB collapses. Okay, so that's what I'm guessing is around June, July. That VWB is gonna shrink as such in July, right? 1st of July, it's gonna do the shrinking. And if you notice, based on just historical study, by the way, I love this indicator. Not many people use it, but it's a gem. It's a gem in the trading industry that I think not enough people use it, which what makes it useful, right? Because if people observe something, if enough people observe something, they will change it, and therefore I like to use indicators that are not used by many. So RSIs, I don't really use them that much, but VWP, it's an integral part of my trading entries, so my timing size, right, timing wise. For example, here at the peak, the VWP collapsed or shrunk, and that's when you got increased volatility after, right? So when the VWP collapses, means volatility has been compressed for a while, and now it's time for an expansion, right? So how a price action does is contraction, and then one contracts, and then it expands, right? Contracts and expands, contracts and expands. For example, here we get contraction, VWP clicked, we expand it to upside, we get sometimes those fake outs, and then we go to the right direction. Similarly here, sometimes that signals the end of the move, so you enter a consolidation period, but also sometimes that signals continuation in the consolidation zone, for example, like here. See, that clicked and that marked the half point of the consolidation period, and the consolidation continued. Nevertheless, there was increased volatility, but we stayed in the consolidation area. And then when the VWP clicked again, that's when we saw the expansion phase of that great move that happened there. Also, where the bull market started is when the VWP collapsed, and that was my pinpoint to actually focus on the market. So I don't use it as a hard point that, yo, the VWP collapsed, we're going down, we're going. No. It's just like, pay attention. Pay attention, something big could happen soon in either direction. Directional bias, that VWP does not tell you, that's based on your analysis, but the VWP tells you that there has been a contraction in volume, there has not been much volatility or trading activity, so naturally people start to get positioned for the breakout, and volatility comes after contraction, right? I support that with normal volume patterns. So if you see, like here, there was increased volume, then you hadn't seen any volume spikes, the VWP clicked, and then you get some green volume, right? Multiple green volumes, that sets the tone that we are going to the upside, right? So it has to use in combination with other indicators and analysis, of course. So that's why I think Bitcoin might see some at least try and break that phase, so we can go to the second leg down of the bear market, right? And that will collapse in June, July. So start end of June, beginning of July, and it might take time to play out. You might get some fake outs first, like what happened here, right? The VWP collapsed, we had a fake out, and then a drawdown, and then we actually continue to the upside. So you get a lot of those confusion parts as well. Be aware of that. Be aware of that. The initial move when the VWP clicks, when the initial volatility expansion direction is not always the continuation pattern that will happen, exiting that consolidation phase or that pause or decrease in volatility, right? So yeah, here we are seeing a crazy decrease in volume, so trading activity, a huge decrease, okay, a huge decrease. We are getting contracted in terms of volume. I do not see a decrease in volatility yet. Volatility had expanded just after that VWP clicked here, but again, expansion in volatility can also mean expansion in the consolidation period, right? As we had seen before. But then when that July VWP clicks again, I believe that might mean expansion, volatility, and consolidation till September, when is the next time it's gonna click, or September is right here, or which would coincide with the consolidation phase if we increase it. Just for the sake of scientific study, I'm gonna remove my bias and I'm gonna increase it to September, to 2032, 17 September. 17 September, okay? Because there is a chance that we can have another consolidation period till the next VWB volatility contraction, and where we can actually retest the bottom range again and hopefully break there if we do not break here in June, July. Right, so I have two time windows, June, July, or the September contraction period. Let's fix that, 17 September. Yeah, okay. Which fits with the average, right? So actually that bias is not as good as I thought. Analysis and study. All right, so the two major points, I'm just gonna outline them here with a circle, where we could see some weakness is when the, or test or trial of breaking the current support is in June, July, or of course September, sometime on September. Okay, right? Does it collapse in September? Let's check. October. That puts us in October. Sorry, it will be in October. That's when the VWP collapses usually. Okay, that will be a little bit outside of our zone, but not outside the range, right? So that's the average, but the range is between 130 to 184 days, so that would expand even further. So that's the great consolidation phase. It's long, it's boring. You get traders that lose a lot of their money, not because they were wrong directionally. Maybe most of them will be correct directionally at the end of that move. But what happens during that phase is death by 1,000 cuts. So you enter a position and you do not manage your risk well, and then you get stop lost and try enter again, stop lost and enter again, liquidated, whatever. Just make sure during such periods you keep trading to the minimal and you keep your entries also in accordance with good amount to make you survive the whole 3 to 9 month period of a consolidation period that can last that long. And that whole expansion phase will probably be just 2 weeks or 3 weeks, right? That's the whole expansion phase. But the consolidation period can stay for a very, very, very long time in crypto. That was 20 days, 23 days. That's crazy, right? So that's about the timing of the breakouts when they could happen. That's explaining a little bit about the great consolidation period and where we are right now. Now let's move to where we could actually go, the second leg down move. And I know that box looks just terrible where it sits right now, right? But this is not, I have not introduced my bias here. That's just statistically wise, right? My bias is right here, actually. That zone is where I think we are going. But statistically and market structure wise, I'm afraid this is where it's pointing. This is where I'm not happy about it, but this is where it's pointing. And I'll explain why. All right, so this one will go in detail on it. So let's go and analyze the previous bear market cycle. And maybe we remove some of those moving averages. We do not need the VWAP anymore, but nevertheless, maybe we should, I'll just keep it so you can visualize the drawdown that can happen when the VWP collapses, for example, right? Just focus on that as we speak, if you're interested in timing volatility and the market. So how we measure the second leg down is I use a very simple scientific approach. You see that line of previous support that we flip to resistance? Well, that's the point where we're targeting, right? So the point from here to the bottom is the percentage drawdown that we will use. And this one is minus 45%. Okay, minus 45. Probably if you round it up, it's minus 46% even. Okay, and it lasted from the break point to the bottom around 42 days, and that's why we have here 42 days and here minus 45%. Okay, that's how it's calculated. And I went and did that for every previous bear market. You see VWP, contraction, and going down. And here is the breakdown point. So the drawdown, total drawdown here was minus 47%, and it took 31 days. Okay, 47% and 31 days. Yeah, here you can also see that when the volatility contracted, VWB, you got the initial move of the drawdown, and then you broke actually from it. So you got the expansion phase, right? Despite it not being here, but it was at the peak to the down, which is even a better timing, if you ask me, right? Now let's go to the first bear market cycle. And surprisingly, the VWAP is coincided with the breakdown of the previous support, right? So yeah, how it's calculated here is breakdown from top to bottom around minus 61%, and it lasted 109 days, and the VWAP was a good timing indicator. Now you see here the VWAP also contracted. Well, that signaled the initial move from the top side, and the other contraction happened just exactly at the break point, and another one, which is good. That exact contraction right there led to Bitcoin finally finding its bottom for that bear market. Very interesting behavior, very interesting pattern. I hope you had maybe learned something useful in this video, right? But again, please be careful when you're trading. Trading should be, you should spend more time researching a trade idea if you're putting, a lot of money into it, more than even when you're buying a car or a house, right? Because those things at least their value remain, right? But in trading, you could actually lose everything if you do not risk control better and you do not make sure you understand the macro and the market structure, right? And if you do not feel of high conviction of an idea, then reducing your size to 1% to 2% of your total capital that you want to allocate is a useful idea to make sure you have a good strategy for capital preservation, right? So make sure you have a good strategy so that you can remain solvent for even if despite you being wrong, if you are ever wrong on a wrong streak. Now every trader gets a wrong streak, and just all they need, if they control their risk well, then small losses. That means you can have a lot of mistakes, but when you write, make sure you capture the whole move. That's where the money is made, right? So that's my strategy, really. I manage risk. I'm wrong often about timing sometimes, but when I'm correct, I know how to double down and double down and double down and then capture the whole move. That's at least my trading style and strategy. Being a successful trader is really finding your trading style and strategy, right? So before making this video too long, let's go and put all the statistics we had collected from previous bear markets and seeing where that sits in terms of price levels. So if we look at that and we just now, before we go crazy about it, right? Also here see that we're seeing a descending drawdown, right? So that's the pattern. We're getting less and less severe cycle on cycle. So I do not believe we're gonna hit that zone, but at least we get an idea of where previous bear markets were, and therefore we can maybe make a better educated guess and have higher conviction about where we think Bitcoin could bottom for the second leg down move, at least. Not the final bear market bottom, because you can see in the previous bear cycle we had, well, the first leg down had found a bottom, but it's not. Sometimes it is the lowest bottom, right? Like here. But sometimes we actually make another move down during the consolidation period. Okay, the accumulation period. Sorry, consolidation accumulation period. So let's put that into the structure, into the chart, and we see something very interesting. So the minus 45%, which we had determined could be minus 46%, sits around 32,300 per Bitcoin, and that sits around the next, or the major support area, the major support area, because that's the level where we actually broke from the bear market, cycle phase, mentally speaking as well, not just structurally, to the bull market phase of the cycle, right? So it's major level. I think we will remain above it or just touch here if we ever go there, but remaining above would be the most logical approach near that zone though. Now, if you take the lower range of that period, then we see a minus 61%, which makes you sit around 23,000 260 per Bitcoin. Possibly, but highly unlikely to go there. Yeah, especially if you see, based on the previous statistics we did for the drawdown, we also said we will be on the upper range of that move, of that box, of that range. We will not reach those low levels, and that's why that right here, that the arrows are still there from the previous video we did. Yep, we reached almost that level, right? It was in correspondence with that red zone, and that red zone really, if you look at the market structure, right, I think it's pretty important to study how markets behave and their structure. Oh, I had it here somewhere. Yep, right here. So if you, apologies for the messiness, but this is just my raw research that I've done some time ago, and this is how this bull market was very similar to the previous bear market in terms of how the price structure played out. And we determined that this purple zone was similar to that purple zone, and actually you got that great consolidation period around the range of that purple zone, and similarly to here, right? And this was the logic behind that red zone that we drew out, okay? So yeah, if we do something similar, and if we go check where the previous second leg down happened, it was around that white zone, right? Which corresponds structurally to the white zone. You got some manipulation up and down, and you've got that to slowly to the upside, right? Tick, 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 tick. That's a very bullish structure. I always love it. I always increase my position here. You got that bullish structure right here, and then some form of manipulation, and it was just before the purple zone. Corresponds nicely, and you see that right here. It's also something similar right there. So in terms of price structure, I think that red zone would correspond to that red zone, okay? And that's why I have that here and there. And that's exactly where we found the bottom of the second leg down move for Bitcoin in the previous bear market cycle. Therefore, I believe due to diminishing returns and the fact that the price structure is very similar to the previous cycle, and that maybe gives us a little hint of where we could go, I would introduce my bias and say we would get a 35 drawdown to 45% drawdown from the level of breaking that previous support into resistance, right? Therefore, my bias sits at around 33 to 38,000 per Bitcoin, okay? That's where I think Bitcoin would go according to that analysis specifically. But prior to me doing the analysis, I honestly was leaning toward this zone right here, okay? And I just graded out a little bit just to let you know that this is also a major support area, right? And it's also a psychologically relevant one because this whole bull market narrative was about ETF inflows, and the first ETF did get approved right here, right, just before the fake out and the manipulation that happened right there, which liquidated a lot of people, longs and shorts. That's where it happened. So psychologically relevant area, and drawdown realistic move if we do not get a big scare. So that would be around 22% to a 32% drawdown by Bitcoin, and that range price would be around 40 to 45%. But to be honest, after doing that research and analyzing the price structure again, and that I'm more 50-50. I do not know, but I'm more 50-50 here or here, depending on the catalyst that hits the price to the downside, and depending on the macro and the sentiment, you would maybe find some middle ground in between those two theories, right? So maybe that would be the range that is relevant to check. You know, maybe we would hit that zone to, for example, I would imagine something like this happening, okay? We would go down, you know, and very violently, in a violent way, we would just wick into that zone, maybe just the other side. Let's better use a path. Yeah. So we break down, let's say we go down here, we do that, and we go down, we wick to that range, you know, just slightly touch it, and then pull up like what we did before and consolidate in that area, you know? And later, I don't know what would happen, but that could be one scenario that could play out. Just a wick to confirm that we are still a Bitcoin bear market cycle. We're still following the cycle path. We still have not deviated by a lot, right? Maybe the force would pull us there a little bit, but then we would come back to the logical place where the drawdown would consolidate and spend most of the time, right? But I do believe there's a high chance that we could just wick somewhere there and then rise above and continue our move in the reasonable place, similarly to what we did here. So if we go look there, what happened there is we just broke down, consolidated a little bit. Oops. We had broken down, we had consolidated a little bit, but when we broke, we just wicked up there, and then we consolidated above that red zone until we came back to it down. All right, that what happened last time. That's also possible, right? You could see something playing out similar to the previous bear market cycle. If you go look at the structure as well, right there, similar thing happened. You went down to the extreme, then you went up, and you start playing above that extreme, and then went up, right? Something very similar had played out even in the previous. So here, the bias works. We worked down so hard, then we went up, and we consolidated above the second leg down move just before we broke above into the bull market phase of the cycle. I think that what will possibly happen, we're going to get a wick into that zone, and nobody really expects us to go here. Some people are aiming for 50,000, for maybe 45,000, but nobody is really seeing that the drawdown could be that severe. I think the drawdown could be that severe, especially if people are caught off guard, like it is right now. Many YouTubers and analysts are not really predicting those severe levels, right? But I think there will be a wick consolidation area, and then we will determine what will happen to the Bitcoin's price after we get to those levels, and then we can see how things played out and how things could play out further from there. But I hope you had learned something in this video. Oh, volume is really contracting. Be aware. You see how we get volume contraction and volume increase, and then the move happens. All right, especially when the VWP is you know it's on its way to contract, then that's what we should focus. Volume right now is contracting. Let's wait for the first signs of increase in volume, for the collapse of the VWP, and for the timing of the cycle to align and everything. Once everything is aligned, you know, that's when you get your red moon, and that's when we get the breakout. I hope you enjoyed the video. If you like it, please do leave a like. It supports the channel tremendously, especially for a small channel like that. Let's get some of that analysis to the traders who actually need it and who need the help as well. If you want to watch more analysis like this and continue to track the great consolidation period and the level of the second leg down move, then do please subscribe and the notification bell. Hit the notification bell so you don't miss a video. Trade safely, manage your risk very well, and I'll see you in the next one.